I think I can still consider it morning, but we're not into the 12s yet. My name is Mike Ning. I head products and marketing for a company called Avangate. And it's actually, I was just discussing with the gentleman up here in the front that it was actually interesting to follow Tom in this discussion. You know, mobile, we work across thousands of software vendors just like you, and the question comes up a lot, right? How do I even think about winning the mobile game? And frankly, what do I think about SaaS? How should we think about the SaaS question? And actually, they're actually very well tied together. One of the things that comes up is if you can actually build the right SaaS solution, right? Part of the value proposition here was always how can you have it exposed to multiple devices, right? One thing that is coming up, yet to really gain a lot of popularity yet, is things like HTML5 and HTML5 URL stores, right? Rather than an app store, being able to deliver to mobile devices your SaaS solution, we're basically using an URL store instead. But that said, I thought it was a good lead-in to this conversation around SaaS. And what is it? How do we think about it? How do we frame the question around, is it an opportunity? Is it something you have to be wary of? Very similar to the mobile question. What we're going to go through today is really just a couple key facts and figures around the SaaS market. And then some of those in terms of how they apply to you as an ISV. Then when getting into some of the considerations of what to consider when you're looking at how to transition, because choosing your endpoint and looking at what is driving how far you go with SaaS. Is it a full, pure SaaS solution? Do you choose some type of hybrid? Or do you even stay where you are, right? And the considerations around that. And frankly, I think what would be most interesting is going to be some of the customer examples pulled forward. Folks like yourself who had to go through this transition, what did they think about? And actually, you'll see lessons learned from even John, the first speaker today, as well as Tom, around how they thought about their markets, and therefore how they had to transition. And ultimately, we'll get to some recommendations about what are some of the things you'd be doing tomorrow, today, to start thinking about your SaaS strategy. First of all, I'd like to start off with understanding a little bit more about who you guys are. Part of what I want to do is just be able to cater a little bit of what I say to where you guys are in terms of the SaaS journey. If I can ask by a show of hands, how many of you are primarily still like electronic software download or physical delivery right now? So just rough cuts, almost like 80%. How many of you are pure SaaS or primarily SaaS? Wow, and all hiding in the back of the room. Excellent. I'm not sure what that says. Actually, how many of you are some of both, where you have a hybrid of SaaS and download? Interesting, and actually our numbers show the same thing in terms of our own customer base. How many are actually thinking about transition? So maybe about 30–40% of you. Okay, and I think that actually ties very well to what we're seeing in the numbers, both in our customer base as well as what the industry analysts and pundits are all talking about as well. The one I like to start a little bit here, which is if you just read the news, it's easy to feel like you're being left behind, right? Every day we read about SaaS and how fast it's growing, how important of a segment it is. In fact, to follow up on what Tom brought up around mobile, Gartner also raised the projection just last week around cloud and cloud services. Even in the face of declining sales across the board, they've actually brought down a bunch of their estimates about IT. But cloud services, actually, they upped the number. And if anything, I think we've seen some countercyclical nature as well. When the economy turns south, people actually are looking for things like SaaS solutions to be able to save them money and make things easier for them, right? And I figured I'd just throw this in as well, since I just got back from Asia. One of the major groups in Asia are calling cloud computing the fourth industrial revolution over there. In fact, China is making a fairly substantial investment in the cloud platforms out there, and actually then encouraging a full set of new SaaS solutions to be built on top. They think that when you look at modernizing every industry, the software is actually going to be fundamental. And it's actually opening up new opportunities for all software providers out there, software vendors like yourself, to think about different industries. In fact, it reminds me of an article that came out late last year, Mark Andreessen. I'm not sure how many of you guys know Mark Andreessen. He did Mozilla, the whole bit, right? He came out with an article in Wall Street Journal that said software is eating the world. I thought it was a great article. And if anything, all of us in the room should feel that the world is a rosier place. Every industry, whether it's like a Walmart and they differentiate because of software and their supply chains management, or it's like USPS, or UPS, I mean, where the trucks are meaning less and less. It's the APIs that they're exposing for real-time information about where the trucks are, where your shipping is, and how do you fold that into your own supply chain systems. That's where the value is shifted. And it's actually affecting all industries. And I bring that up a little bit to pump us all up a little, of course, but also because SaaS is one of the ways that you're seeing the entry points to all these industries as they shift. Of course, under this onslaught of news, some do retrench into their current business models, right? And we work with plenty of software vendors just like yourself, and it's actually not necessarily a bad strategy. And I'll talk about that in one of the case studies where staying in traditional software actually makes sense. And it all depends on what market you're in. Of course, the momentum is clearly on the side of SaaS, and there's a lot of movement when you look at specifically what's happening to software vendors. And this is just a couple stats I pulled from various industry analysts and surveys that have gone out to software vendors like yourselves. Over 35% of ISVs are actually in the process of or trying to move to SaaS. And actually lines up a little bit with what we saw here in the room. Sorry, I dried out quickly. And frankly, the 66% of ISVs are already offering some level of some portion of their software via SaaS. There's more and more where shared resources, whether they're collaborating around some shared data, etc., where SaaS has actually become much more fundamental to how software will need to be delivered. And then lastly, coming out of Silicon Valley, I had to throw in one about how companies are being funded. 8 out of 10 companies in software are actually, startup companies are building as in the SaaS delivery model. And this is actually tapping into not only the speed at which they can get to market and the fact they're trying to disrupt. And again, the model, it's just a delivery model, but it changes a lot of the economics around the software. It has not only the potential to disrupt industries, but it also has a very different financial structure. And the scale economics associated with SaaS is actually very attractive to VC-backed or new startup industry companies. And I'll talk a little bit about the financials and why the structure of a SaaS company actually is a little different. Now, that said, there are worries out there when you talk about SaaS. Half of the ISVs that were looking at this transition are planning to do it with a fully separate group, a spin out. They're actually trying to get it out of their core business. There are fundamental changes from a development perspective, a pace of development, the operations, obviously, in terms of supporting that, but frankly, the financials are very different as well. And people are spinning these out. And it's actually somewhat reflected in the second fact here from Montclair, who does a lot of consulting work with SaaS companies. Over 50% of ISVs will fail at least once in their SaaS strategy as they get out. Doesn't mean the company failed, but they will have to restart, right? They started on the wrong technology stack. The team just didn't get it, right? We've seen many startups flail by the roadside. It's okay. That's what their intent was. But even the Oracles, the SAPs of the world, we've seen them having to retrench and actually purchase their way into SaaS. Their SaaS strategies didn't work, right? And so it's something to keep in mind at all levels, whether you're a small ISV or a mega ISV, right? And I think graphics here help really illustrate the numbers even more so. Just in 2010, not many years ago, IDC showed that over 66% of software was still physically delivered. And you know, I know that in this room we think that's a bit strange. You guys are a little more on the forward edge on some of these things, but you know, box delivery from a volume perspective of revenue dollars was still being moved through retail. I still remember going back to Egghead Software, right, and having to buy my software there. And I just actually, even just last month, I was having a discussion with a major software vendor, and for them, Best Buy is just a display case now. They're not moving very much revenue. It is purely a way to brand and get awareness of your products to the customer, right? Online is fundamental. And then the numbers in 2014 flip on their heads, right? It's very clear, 72% plus is actually moving to online delivery of software, whether SaaS or ESD. So you guys are in a good space, right? This market, just like John was saying, is continuing to grow. And it's a big market. I mean, that alone is about $100 billion of market there. So the market flips on its head, and it actually changes a lot when markets move like this, right? Consumers change how they buy, right? They expect instant gratification, right? This is where they're buying online. They expect to be able to download, to use it right away, right? They expect to be able to pay as you go, right? And only pay for what they use. You see the shifts happening very quickly. In our customers, the shift is happening very rapidly in terms of trying new business models. They have to start playing with different approaches because selling up front is actually starting to get more and more pressured, right? And of course, these changes have implications throughout, whether it's your affiliates, your resellers, and how you get to market. I thought, peeling back, peeling back the onion on software one level, I thought it was worthwhile just to drill down in terms of the two types of software that, at least from an analyst perspective, you often hear talked about, which is simple software, just it's configurable, or fully customized software. I think Gartner brought this out maybe 2 years ago as they talked about how software is actually fundamentally changing to two camps. Right? It's not this clear spectrum of it anymore. It's you have crafted software, and things are gotten so cheap to build now that people can build crafted software for you and actually churn that out. And solution, system integrators, value-added resellers are becoming more and more solution providers as they look at building crafted software. And then on the simple side, the world has changed from a perception perspective as well. When you mean simple software, it means the software is, you understand it. Software is getting smaller in chunks, right? People are buying not these huge suites anymore. They want pieces of the software. That's easier to describe. Just like any retail online, if I had to really understand it, there's some friction. I had to get into the sales cycle. What we're having is a move towards simpler software. Mobile is an aspect of that, where you're getting really bite-sized chunks of software now, right? So when you look at these two markets, now let's take a look at how SaaS is actually changing these things and what are the implications to you guys. So when you look at simple software, things like your quick in, etc., what you see is this adoption towards online stores. It's really a frictionless sales process, right? And when I say frictionless, it's because you don't have to involve full-on sales cycles. You actually have people getting trained to buy things themselves in a self-service manner, and then being able to then deploy and then use. And this is, again, not a surprise to many of you guys who are in shareware. This is a model that you guys have been embracing already. But at the same time, when you look at this, it's not only just consumers, but businesses as well. Small business is actually a rapidly growing category for procuring online, for people to buy via like an app store that's been deployed. So I know some of our guys just got back from the Microsoft the partner conference. One of the pushes they have was where VAR is becoming more like app stores. And selling solutions, and let 1,000 app stores bloom, so to speak, around different industry verticals. And so part of the thing that you have to think about is how do you play in these different channels, right? How do you make your product simple to deploy and be able to participate in some of the new growth in SaaS simple products? And again, both B2C and B2B are embracing simple software. Of course, customized software is actually also something you can consider. SaaS is actually absolutely growing, and I think the numbers, I don't have to go through them, are growing in the customized software space. And there's really two implications for folks like yourselves, right? Am I going to be a platform, right, that will be customized? This is actually a very hefty decision because you have to make a major investment in becoming a configurable, fully customizable platform. Salesforce.com had to invest in Heroku, Force.com, right? Oracle, I mean, all these guys have fairly full customization layer. SaaS, in general, is meant to be a little more one size fits all. And to become more customizable, you have to really push. So that's one thing. Can you be a customizable platform? Or, frankly, the more interesting role for many of us is that these platforms are creating these ecosystems, right? Whether it is, like a Informatica or, like a Salesforce with their App Exchange, they are creating opportunities for any of us to be creating software into these environments and to be able to be pulled together as a solution by these exploding number of solution providers that are crafting solutions for their customers. And again, you have to think about how do you get to market, right, with your solution? How do you participate as these markets move towards SaaS? Of course, just pulling back a little bit, and this may be a little obvious, but I think it's worth just touching upon. Why SaaS and why now? Well, it always starts with the customer, right? From more of a business, from a customer's perspective, it fundamentally lowers the cost. They're only paying for what they use, and there's a sense of control. Like they can always just give it up, right? The reality is, products are a lot more sticky than that, but there's a perception of control, and that they can do it quickly. And as more you get into the B2B side, what you hear over and over again is the ability to get away from IT, right? When you're non-core, like you have software for project managers, you have software for sales guys, right? The original one, collaboration. These are areas where IT is like, that's not really core to what we do. You guys are kind of on your own, right? And it's open whole opportunities for SaaS players to come in and disrupt this model because you don't need infrastructure. Like the line of business doesn't have to put servers in. The line of business doesn't have IT guys to support it, right? In fact, the numbers came out just a couple, I think it was late last year, Constellation Research did a study. They showed that IT budgets were actually decreasing. I think it was almost 8% down, IT budgets. But technology spending by companies, by line of business, was actually increasing by over 15, 16%, right? The shift is to line of business. It's not about selling IT, right? It's about selling value and benefits. And we'll talk about that in terms of one of the case studies I showed. But the buying behavior to get into businesses are actually opening up, right? And I think that there's interesting opportunities for those of you who are fleet of foot, as all these industries are looking at software to actually change the way they work. And also on the consumer side, they're already used to getting SaaS applications. I mean, they just don't know it. How many of you guys think of like Facebook as a SaaS application, right? A Flickr, your Gmail. The problem is that these guys, consumers, I should say, don't pay for this stuff, right? They assume this stuff should be free, right? So it's ad-based. These are the models that work today. That's not to say they're not changing, right? You have prosumers, Evernotes of the world, the boxes that give it away free, and then product monetize the 5%, and that's usually starting to get to the prosumer level, professional level, who will pay, and using the rest as a way to get more users, right, and get awareness. Tell a friend, but the models are actually, like I said, shifting quickly in terms of what they want. And from a vendor perspective, I think these things are very interesting as well. Why should you guys want to change? What is it that makes it interesting for you? Well, number one, your customers are ready, right? These guys are adopting, and they're actually starting to demand it. And like I said, I'll have some examples of where that's the case in terms of a market and what drives that. But frankly, if you're in a market or looking at a market that's changing quickly, is a download going to be able to service this market? If you need to release every month to be reactive to the market and be fast, right? Can download ever keep up? And this is the issue. If you're actually in a market that's fast evolving and you want to be in that growth, anything above 25%, right? You're primarily going to be able to deliver on a SaaS model and hit this market much faster than any of your competitors will. Right? You have to think about it that way. And of course, the benefits of the scale economies. And again, I won't cover here, we'll get into it, but this is what VCs are looking for. Why does it take off so quickly when you start building up some momentum? And I believe there's one called the flywheel effect or whatever that Wari presented this morning. Similar in certain ways, we'll talk a little bit about how this scales up. Now, when you talk about the shift to SaaS, and the quick survey I did in the room, you guys are in good company. Right, we did a survey over our customers, and these are the numbers that came out. First, what percentage of your sales are subscription-based? How many of you how are you using subscriptions today? And over 45% of our customers have some portion of the revenue coming from subscriptions, but it's bimodal. Very similar to the folks in this room, which is you're either SaaS or you're either a subscription or you're kind of pay up front. Right? And the two are not mixing at this point in time. And that is not surprising. People are just starting to pull these models together, and you're seeing a lot more attention on that. I know I'm answering a lot of questions from our customers about how to think about this transition and to take advantage of subscriptions and SaaS as a model. And of course, it introduces, as you get into SaaS or subscriptions, the need for trials. And it's something you guys, as a whole, already know, from a shareware perspective, but broader software in general is really starting to pick up and understanding the power of being able to put something free out and earn the right to monetize. So, when you look at the pressures, the question is, what are the considerations? What are the things I have to think about when I look at what my SaaS strategy should be? How far should I go in SaaS? Sorry. Especially as it relates to my financials, my product. What services can I add on from there, right? So let's look at a couple of these considerations as we frame up the SaaS transition, right? The first one is financial. This shouldn't be a surprising curve to anyone. Anyone who runs a business is thinking about how much I have to invest in front, money down, to how much do I get when people start buying my stuff, and then when do I break even, right? This again is not a surprising model. The problem is that SaaS makes this worse, okay? When you look at SaaS, there's a couple things that happen. One, it takes a little time to build a SaaS product. We've worked with a variety of companies doing this transition. Even with a fast team focused on this, we've had 6 months to get to a prototype. And larger size companies who have fuller size products can take years, a year and a half, 2, 3 years to actually catch up. Again, both products continue to evolve a little bit, but for the SaaS product to ever catch up to complete the SaaS conversion. And when we look at the numbers about breaking even, there is a lot of reasons why the economics work against a SaaS provider, right? One, you actually it transfers all the costs to you as the vendor, right? You have to take all the costs up front. You buy the server time. You have to scale in a lumpy fashion, right? And you then take the money from your customers over time as you rent out all this hardware. It's a capital-intensive business, right? You have to put the investment up front to get the revenue streams on the backside. So that actually drives down how much investment you have and actually compresses your margins on the product. So in general, again, now I'm starting to generalize and I'll apologize if it doesn't apply to you. When we look at download software, your gross margins are probably hovering around 89, 90%. You're getting pretty good gross margins on every sale. On a SaaS product, you're down at 60+%, right? And your gross margins shift actually has to fundamentally change your strategy about how you fund this company, right? And how you fund this takeoff. It's good that the customers know that they're renting IT from you, they're renting hosting from you, so they pay a little bit more. But depending on how you buy, whether it's monthly or yearly, they're stretching out these payments over time. And if you have sales guys, that only makes it worse. Sorry, Jared. Because they get paid on the commit up front, right? Which means you only have more cash out front side if you have sales guys. And you're still only getting the revenue on the back side in increments, right? And so I know the first speaker, I think it was the first speaker, John, had talked about the break even if you have a model where you get 3 times the the customer acquisition cost is an interesting number. It is. There are some metrics that you have to think about your business. A lot of people think about the first year. You should be at minimum. You have to be able to be equal from a revenue perspective to your CAC, your customer acquisition cost. And you need to start thinking about the metrics of your business up front as you go on this journey. The good thing is the market has evolved over the last years. Not like this market is really old, right? And frankly, if you go with something like an Amazon, right? If you host yourself on these type of platform as a service providers where you don't buy servers, you don't have IT staff to maintain them, you don't have to actually 24/7 to maintain that infrastructure, you can actually flatten this curve. And Web 2.0, those companies really took advantage of a lot of this, including consumer-driven content that really helped flatten, again, the cost curve for some of these companies, right? There's always opportunities to take costs out, whether it's a platform as a service, whether it's something like us, which is more of a commerce as a service engine. Again, you don't have to put the upfront costs before you actually start making money. But then you start moving more on scaling up with your scale, right? And I just thought I'd throw the number up here. On average, it takes about $35 billion of cost before successful IPO companies. The good thing is there's lots of money to be made before you can IPO. So depending on what route you're in, there's different curves you can take on this. And there's plenty of articles on the web that talk about how you can adjust the curves and models, right? Some will take very heavy investments up front for sales and marketing, and that's where you have to accelerate into the market and grab share. There's others where you can take the advantages of SaaS and actually have a much lower burn rate up front. And again, you have to plan out and consider your financials when you make this transition to SaaS. And of course, it's not just financial considerations. You have to think about your organization and the operations around that. So from a go-to-market perspective, gross margin has an impact, right? If you have a lower gross margin product, you have to sell more of it, right? And fundamentally, you're going to sell, you have to get to a level of volumes that focuses on the acquisition all the way through to actually accelerating or actually better qualifying any leads if you have to have sales guys, right? You have to start leveraging things like telesales and moving the sales into self-service models. And that becomes a different approach. And one of the things that SaaS brings is competition. The problem is that if you are delivering a SaaS product, the economics of being able to build a SaaS product are pretty fast, right? What happens is that means competition can move in pretty quickly as soon as the space becomes aware, right? And how do you actually get a level of differentiation, right? Do you get up front and try to brand yourself, or do you try to get more friendly with your channels, right? Any type of commoditization gets back to, do they know you and can you get pull, or can you control the channels by which people are buying? And how are you enabling your channels? Are you getting closer to them, right? From a sales focus, we talk about the shorter sales cycles. You have to close these deals faster, right? Is it telesales? Is it inside sales? How do you better qualify? And even how do you actually get your sales guys to think beyond the first sale? The problem is you're not selling a product anymore. You're not letting a third party implement it, right, most of the time. You're actually supporting this, and the only way you're going to make money is actually getting these guys to use it more. The add-on sales, which Tom was just talking about before this. The ability to earn the right to sell on services on top, right? And from a product and architecture, I think you guys can probably have already looked at this space. I don't have to go into detail. There's plenty of out there that talk about what you can do to move to a cloud-based solution. But obviously, you have to start thinking about new things, scale, integration to your desktop, or if there is a hybrid model, or on-premise servers. How do you manage sensitive data, right? Actually, one of the vendors that we work with, they went with Amazon, right? And for the US, that was great. People were like, okay, it's a leader, we get it. And from a security privacy perspective, we're getting more comfortable with that. Germany thinks that Amazon's full of holes, right? It does not meet that need. You have to think about what market it's going into and how you want to architect your solution. And one of the numbers on average is it takes around 10% of your revenues to fund a SaaS development in parallel with your standard products. It's a chunk. Not to scare you guys, obviously there's a lot of benefits when you start going into new markets, and we'll talk about that, but it is a chunk. And of course, one of the biggest things is the operations and support, right? You now are addressing the customers on a regular basis, right? It's not just selling them up front and you're done, right? And you're thinking acquisition, then renewal. That's where a lot of us are today, right? Acquisition, renewal, acquisition, renewal. Now it's going to be much more about what's the state of the entitlements this customer has, and what more can I sell on? What add-ons can I have? And how do I continue to touch them at any touch point? Let's say the customer wants to add more, like Tom was talking about games, right? One of the stats he didn't talk about was Angry Birds. I remember seeing this, the CEO speak. He was talking that it was downloaded a couple 100 million times, right? A lot of them were free. 40% had bought the Mighty Eagle. I'm not sure if you guys know what that is. Basically says that when your kids are stuck and they want you to get past that level, you pay 99 cents to get past that level, and you just basically nuke it. The 40% had purchased a Mighty Eagle. That is an astounding amount of cash, right? It is an astounding amount of cash, and that model is, just like John was saying, is moving to software as well. People are willing to pay up front or just go with a freemium level and then add on. Evernote, right? Clearly 5% are the only ones you're paying, and yet their monetization is quite large. Dropbox, part of what they do is they encourage their customers to get others, and this was part of the secret of their success. For every customer that signs on that you referred, you get another 500 megs. Again, what they're doing is creating, using the freemium model to service all these customers for free, right? They're getting pieces, they're adding little components, but then you have to support all these different business models, right? how do you get these guys to do things that grow actually how you make cash, and then collect the money over time? This is actually an operational issue that's quite high. In addition, they're going to call you a lot more. They're looking for help. You are supporting their success. And I know many of you already do this. Not all companies in software are there because, again, there's been a fairly large separation sometimes between software and customer. And the transition is hard, not just because of the ops and orgs, but also the channels are changing. Let me just ask quickly, how many of you guys sell through resellers or affiliates? So maybe about half of you, which is actually about where the numbers come out. A survey just at the end of last year showed that software companies are selling, or technology companies are actually selling about 50% of their revenue through channels today. And actually, in 12 months, that number was expected to increase by 4 to 6%. Channels are important, and they're continuing to be more important. And the problem is that they're actually starting to get fewer of them, right? There is a consolidation going on because they have to adjust to SaaS. They need to bulk up to handle the more deals. There's less implementation work. They have to do more deals. Their gross margins are down. They have to do more deals. They have to do more marketing. The mom and pop resellers are having a harder time making this shift. And so how do you protect your channels as these channels continue to consolidate or bulk up and start to sell different things? That number on the bottom really reflects that. Last year, they were selling, on average, 4 strategic products, a reseller. This year, they're selling about 5.8. And again, they're getting bigger, and they're starting to pick and choose among the products they resell. So, this brings us down to how do we help? When we talk to our customers, how do we actually help them think about what model do they go to when they look at SaaS, right? Do they actually, the way we set it up is, what are your considerations? What are the decision criteria you should be thinking about? Level of customization that your products need. What are you looking for from an objective? Are you milking it? Are you going to new markets? What does the market, your customers in that market really need, right? And even what role does the channel play? And that actually starts driving a little bit of, are you a traditional player? Should you just sell, download product? Maybe change the business models a little bit, but fundamentally milk this product. It has high lock-in, high margins. Oftentimes you'll see this type of products in more of the mission critical where IT wants to bring it in-house. Regulation often drives this as well, let's say in the healthcare industry. Or do you want to go hybrid, where you see the ability to deliver for your customers, not just your desktop or on-device, but also part of your solution is based in the cloud. Right? And a lot of this gets back into, can I supplement, add on more revenue? And the first speaker today talked about, how do I find opportunities to sell more? This is one of those places where I can deliver on top of my software very quickly, new capabilities, right? And bolt on. And then there are those who are crossing over. And actually, one of the things to say about hybrid, it protects your solution from competition, right? If you can extend the life of your desktop, if you can extend the life of of any server software you have by having some add-ons, again, you start defending the lifetime of those customers. And then, of course, you have crossovers. I have 2 markets now. I have my traditional market, and now I'm going to enter new markets with a SaaS solution. And this is where I'm really entering. I'm fighting back competition. I'm trying to get into new markets, or I'm actually trying to increase my valuation if I'm raising some money, right? Because the economics, again, of SaaS rack up. Or you go pure SaaS, right? And that's where there is the need to go to full models. Now let's look at a couple examples of customers that have gone down these different paths. Reza Software, it's a shareware, traditional shareware, and they looked heavily at this question about how do they actually monetize better their customers. Total Offense is actually a mid-sized software vendor spun out of CA, and they chose the hybrid model. And a lot of that was driven because of the need of their specific market, and how do they continue to become a total solution. And then finally, Team Lab, which was maybe similar to some of you guys as well, just like Reza, but they have, they're part of a sort of a group of development teams that actually are constantly cranking out like 6 or 7 different type of products at any point in time. And this was a spin out. They fundamentally changed their model from actually pushing first on a server-based approach. So let's go to each one of these. First, Reza. These guys went down the traditional strategy side, and yet what they had to do was embrace subscriptions and change their pricing. They are a multimedia and PDF converter company. other products around splitters, cutters, etc. And like I said, the structure probably very similar to some of you guys. And what they did was, from a strategy perspective, from a market perspective, they embraced a new subscription model with a traditional download product. They have existing B2C customers, and frankly, when we look at the characteristics of their market, while there was low customization and SaaS could play here, really, when you look at what the market needed, it just had very low pressure to change. These guys actually did a lot of work on their PCs. Sure, there's some cloud-based solutions, but what these guys really wanted was, there was really very low pressure to move. Again, very low cost for installation and running software. People are just used to doing it already. And so what they did was, they moved to a perpetual licensing, and they added services on top. For those who moved to subscription, and actually it was the same price, but charged yearly. They got the updates, and they got a higher level of call-in service and support. And again, it got back to, how do we actually add on more? Did I price my first product appropriately for my customers? And to support this, because there are many more touch points with the customer, they expanded their subscription billing capabilities. They expanded their account management, self-service management, of how do I actually go download the software again? How do I actually change my subscription or cancel it online without causing me a lot of headache because of all the phone calls, right? And it worked, right? It's surprising. And again, back to the first speaker, are we even charging enough for our software? These guys kept the pricing, moved it to a subscription model, and just from the last year to this year, the net income is up 25%. Right? A bunch of that is driven by a 162% increase in their renewal rate. When we first started this with them, it was 11%, revenue became 11%, subscription revenue, I should say, became 11% of their total revenue side. Just last month, it is now at 24% subscription. They talk about a much more sticky customer, someone who just expects to be upgraded, someone who expects to get service, who's not looking around for an alternative product in a very heavily contested marketplace of these type of products, right? And I think that it's interesting to look at this model, because again, there's plenty of spaces where maybe you should be looking at your current products and say, okay, can I just change the model? Can I just add some services to that? And it's easy to start, right? So let's shift to total defense. And the fact that they went down this hybrid model, where they actually had both download and SaaS for their current customers. Just a little bit about Bitdefender. They are a malware and anti-crimeware solution. Over 50,000 businesses use them, and they have around 4 million consumers using them. So to understand a little bit of why SaaS for these guys, I will spend a minute talking about this market a little bit. And it starts with the PC, and I'm sure many of you guys probably know this market better than I, so forgive me if I'm repeating what you guys know. But for security vendors, endpoint security was fundamental, right? How do I protect the machine? And that's where a lot of the market still is today. But as you added machines, you ended up going to a perimeter-based security as well as endpoint security. Now, unlike some of these other markets, this market has been disrupted by the cloud itself, which is markets have moved such that the threats are now outside of your perimeter. Now, you may have had an IT group that was actually fundamentally driving you to do things like VPN when you're in China, and then you actually have 10-second response times. Actually, let's go back to a different picture of IT, because just in case there's someone in the room. And really, what these guys are looking for is, how do you actually have a cloud-based solution that better matches the needs of this market, right? And so in this case, targeting their B2B customers first, they're first going here and then moving to the B2C side. And we'll talk about how that changes how they go to market a little bit. They actually had some customizations. They needed to. The perimeter security, some of the deployment to end devices, endpoint security needed customization. The IT groups wanted that control. But for this cloud-based solution, this mobility solution, IT didn't want to keep up with the fact that phishing sites pop up every 3 days and then go away, right? They didn't want to keep up with the databases of the latest security threats. Right? This is a perfect solution for a cloud-based approach where you can complement your core solution, right? In this case, the objectives here was to penetrate the whole solution and block competitors before they can come into this market, because they own these customers. right? And there are threats coming in from the outside to do this by hardware. You know, Blue Code and these guys are providing devices or appliances to provide security for machines on the road, right? Deep packet inspection. And so this market, you know, these are edge guys. We talk about when it's non-core to the IT guys. This is a perfect market that needs to go SaaS. And I think Tom may have left his cell phone up here. Should we answer the phone and see who's calling? All right, just checking. It's a perfect market to go to SaaS, right? Interesting enough, this is the market where the resellers still play a very large solution because they actually craft the full solution at the customer site, putting in endpoint security, etc. So let's talk about their strategy and what are the lessons learned for you guys out of this, right? First of all, from a strategy perspective, they started with an experienced executive team. They actually brought in folks from WebRoot, folks who knew sort of hosted or cloud solution and understood the economics behind that. And then they accelerated. They started building, and to get into this market faster, they actually just purchased a company. You'll see they announced the news. They purchased a while back, but it actually gives them the scale. Because to have this type of product, you have to have presence around the world so that when you travel, your speed of protection, it doesn't slow your browsing experience down. Their go-to-market had to be changed for this solution in particular. Why? Because the SMB were okay with this. They're like, you know, I don't want to deal with it. You guys go ahead and use this, take it out of my IT hands. And actually, the large enterprises were fine with it. They're used to outsourcing large solutions to third-party providers. It was actually the low end of the enterprise which had the biggest problem. This is where the jobs were at stake. You had folks who did this for a living and were protecting their jobs. So they actually had to sub-segment their customers. And something to think about when you look at addressing a new market, who is going to buy and who do you have to get around and who do you have to convince? And then part of this is actually also enabling the channels because they're such a strong part of the sale to be able to manage those subscriptions on your behalf, which is something that channels don't have the ability to do today. Right? A lot of times the customer has to come back to the vendor, bypassing the channel in a SaaS solution. How do you actually better support the channels to keep them in the loop, keep some of that effort off of you as a vendor, right? And from a sales focus, they had to accelerate, and they used trials. Again, all the things that you guys already understand from a go-to-market perspective. And frankly, everything changes for them, right? Scale, worldwide SLA delivery, and they're burning a ton of cash at this point in time. They have a lot of infrastructure at this point in time, and they're just piling in the sales on top of this. But this was the investment they had to make to get to this. One of the things that they said was the biggest changes to the organization was restructuring their communication, actually. When you have this type of relationship with your customers, ongoing like this, you need to be constantly communicating with your customers what you just released for them, what's going on, being very transparent, and they actually set up the team just to focus on that part of it. And again, you know, their focus now is extending this hybrid solution to the consumer side, right? Unlike the B2B side where they can actually price this differently, the consumer needed a simpler solution. And again, it's about protecting those 4 million consumers, right? How do you make sure that you pay one price and you turn what was an endpoint security solution to a subscription, right? And offer them all these pieces for the entire family. And again, this is where we see markets being disrupted and companies having to either rush in to take advantage of that opportunity and then pulling the systems in place to support that. The third example here is one that went pure SaaS. And this is actually a company, like I said, they're a scrappy group of developers. They have 6 or 7 products at any point in time, or businesses going on at any point in time. And they actually, about 3 years ago, had an open source solution and around project management, collaboration, etc. And it just didn't fly. It didn't hit the market, right? They just couldn't monetize it. So they took off and they started a SaaS-based solution, which we'll talk about why it matches better. We talk about collaboration, etc. Now they're up to over 100,000 users and growing very rapidly, and actually shifting to a new approach around how they manage their customers here. So let's talk a little bit about their market and why they had to make the shift, and see if this applies to you guys in your markets at all. You know, when they talk about their project management CRM type of solutions, you know, shared calendars and project lists, they're really talking about B2B and prosumers. There is very little customization, although there are add-ons. So they are more of a platform that others are now adding on top of. And what they really want to do is enter what they saw was a super high growth market, and with a product that fundamentally was different than their server-based product, which was not working well. And in this case, the market itself actually looks for a SaaS solution. They want low cost. You have folks who are not core to the development, to the IT staff, and not getting support to do project management software. And the fact is, project management, especially when it's global, has to share resources. It's actually a natural fit for something you just want to plug into. And plug into from any device. Again, getting back to the mobile question, right? Part of the value proposition of SaaS is actually be able to access it anywhere from any device, right? And so this market was actually very well suited for SaaS, and then actually since their shift, they've actually seen a rapid acceleration of both customers, free users, as well as monetized customers as well. And like I said, they spun this out as a different group to keep the focus on SaaS. They thought it was important to do that. They actually are embracing the freemium model, not too surprising, but they had to shift a lot more to online marketing. A lot of the webinars, the newsletters, etc., and building up their database, right? And interesting enough, in this case, similar to any type of freemium model, you need to get your advocates out there. And these are the guys who you have to incent just to give you awareness, right? It's just like the Dropbox. How do you get the advocates who really like it to share it with their friends? They get a little reward for it, right? And make this more viral in terms of getting from your core base, so that even though you may have 95% of that 100,000 free, each one of those free guys are actually serving as a way for you to spread more usage. And in this case, working out for them. Like I said, from a product perspective, they had got a prototype out in 6 months, but it's been evolution since for the last 2 years, and they're finally getting to where they have the finalized sets of products. Key to this, though, was the speed at which they could respond, right? Voice of the customer, every month having new releases, constantly blogging and getting back feedback from their customer base. Very different than any of their other products. And they, like I said, had to spin out a group to do this. So, summing up the various case studies, what is it that some of the things that pop out across all our customers as we work with these guys? Well, number one, as always, and maybe this is motherhood and apple pie, but you have to start with the end in mind. What is the model that best fits your products that you're thinking about? Is it SaaS? Is it on-premise? Is it some type of hybrid that's best going to suit that market? And frankly, you should think about the segmentation of your customers, because one size has to fit all, or else you're going to find yourself trying to extend it for every individual product and every individual customer, and you'll just never make it. And you have to manage your costs very tightly, as we said, and that means shortening that whole order-to-cash cycle. How do you actually automate that revenue cycle, right? And of course, thinking customer-centric. Many of you guys already have to do this in the market you're in. I think the main thing that comes up here is that with SaaS, you actually get a lot of information about how your customers are using the product, right? And this is where you don't see it yet today, but it is a rising trend we see with more advanced companies, which is I'm actually thinking less about products and more thinking about sets of entitlements, right? Sets of features that I can bundle together, and I can test those really quickly because I can see who's using what. And I can say, okay, this segment is actually only using this part of the product. I can actually make a smaller product for them and get more of these guys, get volume here. These guys use everything. Maybe I can charge them more. How do you capture all the revenue associated with the demand curve of that product? And that's where you actually have more capability in SaaS to start playing and experimenting with how do you monetize, what actually works and doesn't, right? And actually repackage that quickly. And of course, part of this is building a lead machine. You just need more deals in the system. This is where marketing automation, and you see the advertisements every day now. It's because so many companies have moved towards understanding that if it's easy to buy, the marketing is actually becoming new sales, right? You actually have to engage the customer very early. They're not going to call you, right? They're going to look you up online, and they're going to read your blogs. They're going to read your materials first, and you have to build up a lead machine, earn the right to, just like you guys do today, many of you are in shareware, land and expand, right? And given the fact that you can package it differently, you have many more options about how you monetize and add services on top, just like some of the examples we gave. And I'm going to skip a little bit of this. Ultimately, there is a shift of mindset. when you're not leaving a piece of code behind, right, for a third-party implementer or your customers to take care of themselves, that does actually shift what you have to do from your sales perspective as well. There's a term we use, and I'm sure many of you have heard of it, hunters and farmers. You need people who can actually close the deals quickly and know how to do that, take the telesales and actually move them without having to visit them. And as well as you actually need farmers, people who can keep your customers growing. How do they actually use your product? How do you make them more successful? Because your success actually is increasingly tied to their success. And of course, with all these touch points, you just need to automate much more of that self-service. How do they change the subscription? How do they add more, add on, in-app purchasing? This is one of the reasons why it's grown so much, because you can just do it in the moment. I needed it, I just added right there that capability, and now I'm paying on a monthly basis. How do you actually do that? You need a tool to help you do all these things and keep you sane, right? And ultimately, this comes back to driving customer success. And this is, again, just the basics of the fact that you move beyond sort of the upfront sale. Hopefully, this was an interesting summary of some of the considerations you have to think about when you look at SaaS. I know that this has been, I think, hard-earned from many of the companies we work with as they've actually struggled with different SaaS transitions. You see a couple different models here. Believe me, there are many more that have failed along the way. Not our fault. So, no, just kidding. But many more that have actually had to struggle as things are just not known. And I think this world around SaaS is getting much more known, right? It is at a tipping point where people are actually able to actually embrace these models. You have tools and platforms that actually can take some of the costs out of the front that make this a much more interesting model, okay? And with that, of course, the final piece of advice is get started, right? And just think about it. Even more so, and I will make a little bit of fun of Tom, than mobile, because I do think that SaaS is actually fundamental. Once you actually have a solution that can deliver to the cloud, you'll actually be able to then deliver it to any touch point, right? And as these markets open up, app stores are fairly closed. They're taking a big chunk of your money. They don't give you the customer, so you don't own the relationship. Markets will open up. There are many app stores starting to open up because people need to buy in various contexts, and you're going to have the opportunity to have different devices, different form factors, and you want to actually have one code base that's supporting all of this. Okay, with that, I thank you guys for your attention. It's been my honor to address you guys, as well as work with many of you. And so if you have any questions, I guess we can switch over, and otherwise, thank you very much. And I'm in front of lunch, so I apologize. I know we probably want to all get out of here. Any questions?
I have one quick one.
And everyone's like, oh God, I'm hungry.
So regarding the example you gave for the Visa software, I'm not sure if I'm pronouncing that right.
Visa, yeah.
So you were saying that they did not change their pricing?
They did not change their pricing. They just charged it every year. Remember, some of their customers were buying it for the updates already, right?
So that was my point. So for the existing customer base that had purchased it once thinking that that was it, they had it for the lifetime that they would potentially have to pay maybe a $9.95 upgrade or whatever.
Right.
Then what kind of messaging went to them in terms of, how to, like suddenly now, are they going to have to buy the software again, or were they grandfathered in, as our first speaker talked about? Or?
Well, part of it is grandfathering, right? And how do you actually do that? Because the customers that made you have to protect them, because they will feel the most change in expectations. The question that I think the first speaker really hit was, are you just undercharging for it in the first place? Were people ready to pay $29.95 a year anyway, but you just were not hitting them? And so part of it was messaging around service. We're adding service, you're getting the latest updates, and actually it is a new product. You would have ended up buying some of this stuff already. Part of it was grandfathering, absolutely. So I actually believe fundamentally you do have to protect those who actually made you. And then the question then comes into how do you address the new customers and show them value? And it's just being a bit assumptive by pricing. And if it didn't work, they would have brought it down.
Right.
But they barely saw any conversion loss. It was amazing. That was stunning to us. We were like, you're crazy, right? People can see it, right? If they just look back, they would have noticed it. But yet, customers just went ahead and purchased. And they kept it on a subscription basis. And the retention over already 2.5 years has been actually fairly decent for this product. I would have actually expected a higher turnover, frankly. But the service they offer, the communication, again, has been able to keep the customers renewing and actually driving right to the bottom line. In fact, it was a McKinsey study that showed that every percentage of retention actually drives like 4 to 5% of profit right to your bottom line because the acquisition costs are no longer there, right? Of course, we're all spending a lot more on retention. So that was an older study. I think now all of us are having to do a lot more hustling to keep our customers with us. And so, but still, it's very profitable to keep your current customers just because the acquisition costs can be so high.
That's a great example that you can just keep the price, but do you see like a sweet spot or an average of price for subscription to price before, like one-off price?
Yeah, it actually depends by industry, so it's very hard to say. I've seen $5.99 to $9.99 as just very common monthly price points now. Our average order volumes tend to be around over $50 in our carts, and so is that some package and service? People going monthly. I think
I was thinking more of a relationship between the price you have if you transition.
I see what you're saying.
What you had before is a one-off price, and then.
If you're buying the yearly versus monthly, I'm usually seeing about 25 to 35% more if you just add up all monthly, which is kind of interesting. But again, I think we're still in. Every model is different. This is where you need a tool to help you do some A/B testing. And just what are they paying for it? How much are they willing to pay? And you can just take the low 5% and see, did I lose? Am I converting? Everything's measurable online, and there's no reason why you shouldn't be playing with your price points. I absolutely agree with speaker number one. I will let you guys go to lunch. Again, thank you guys very much for your attention.